Hello, let's have a look at Euro USD again. So if you remember, uh, a few weeks ago I did this Elliott wave analysis on Euro USD. I'll link it below. Let's have a look at it again and see what's happening. So if you don't remember, watch that little video. We did analysis. I updated my count so we can see 1, 2, 3, 4, and 5. And what's interesting is that one, so I put my target zone 1 on there. It didn't quite hit it, but that's how it is. It doesn't always hit it. This is, in my books, almost a hit. So target zone 1 is there. What is target zone 1? That's the fib expansion. It's here. So we started drawing it from here. Not the wave 3. It's actually this thing here. Not that, this one. So we draw it from, starting from where we think is start of wave 1 or the start of wave 1 within 3. I usually try to do it in the start of wave 3. The 1 of wave 3, like here, goes up, comes down, goes back up. This is where I try to get in. This was not smooth the way we like it. If I zoom in, normally I would get in here and then I would get out there because price is broken below box. But on this occasion, we got ourselves a long entry based on this because that's a pin bar. It's a bottom of wave 4. It faked out. You see, it didn't break it. So that was a good indication. We went long here, added on there, and then let it run. After that, when 1, 2, 3, 4, 5 happened, usually what will happen is that there was going to be an A, B, and C. So today I want to explore that A, B, and C, which could lead to a trade. Could have led to a trade already. It has actually once. But there's one here that I want to talk about. So 3, 4, 5, what I'm seeing now is A, B, and C. So we have an A down, a B up, and a C down. Now to prove this is a B, I can also look at inside the B, and usually what happens inside the B is you have an A, B, C pattern. So I can see it right now without even going to a lower time frame, but we can go to a lower time frame. But I want to mark the area, so, and I'm going to change the color of this box, which is the beautiful TradingView platform that allows us to do many things. Okay, that's too bright, so we will just change it that way. And then I will go to, let's say, a 4-hour chart. And if I go to a 4-hour chart, I can clearly now see a peak, cross of zero line, and a peak again with divergence. So we have another 3, 4, 5. That means this is actually A, B, and C. That is very much possible. So what happens after A and B? There is usually a C down. So going back to the daily chart, I'm going to remove this now so we can see the price correctly. The C is quite impulsive, and it would go down. It did go down here, but what I saw here, which allowed me to take a short, was this fake out pin bar. So same like this one, as you can see in this occasion, it is a C down, ABC, right, within the wave 4. Sorry if it's too complicated. I just like talking about this. Otherwise, there's not much use. It's just interesting talk. But so if you understand a little bit of A, B, and C, C is impulsive. It usually is associated with news and fake outs as well. So this is where it did it before. And now, since this is A down and B up, and within a B you have A, B, C, let me actually mark it so you can see it. A, B, and C. And I will change the color of that to yellow or green so that we can see that this is actually the micro ABCs, A, B, and C, right? So what C has done is that C has created a one-day, I like to call it a pin bar. I know I have candles, but I don't really follow all the candle patterns. I look at these outside bar, inside bar, and pin bars. That's what I like. So if you look at this, this is a fake out. So from the grand perspective, you look at the market and you're like, okay, so the euros have done all this grand gain all this time. surely it cannot continue. It comes down, goes back up, and it loses momentum. The sellers are winning there. So here, this was a very good opportunity to go short if you had this perspective on you. It's like A, B, and C. So you go short here, your stop loss will be above. And if the price goes above this, you'll be proven wrong. That means the trend is resuming. That's a different thing. So it went down, hit the lows of B here, reacted to it, went up. This actually produced a pullback opportunity. So if I put a mark here, crossbar, I'm going to hide those. Actually, I can't do that. I will do Alt C. So if you do Alt C, it gives you a crossbar and it prints it there. So if I go to the hourly chart, you see that it had produced what I call the setup one. You have a peak of 3 and a cross of 0 line. That's your wave 4, and that's 5 down. So this is a beautiful setup here on the hourly chart you could have taken. And if you look at it on the 4-hour chart, then it wasn't quite set up, but you could have gone short here on the 4th of March. That was a really lovely short. Now, if we look at this chart now, and this is what I wanted to bring you to, the 4-hour chart has now produced what we can easily call a 3 down. So let me do another count on this. So I can call this some sort of a 1 here, 2 there, 3 down, 4 up. So that means we can see a 5 down. Let me change the, how do you do that? Okay, here. So we'll change that to, let's say, minor. I don't really get into these minor and sub, all of that. I'm just doing it so that we can differentiate the colors and numbers. So we have a 1, 2, 3 down. So because we know from the daily time frame that this could be a higher degree 4th wave, you see, because we can't say it's inside of a wave 3. So if I take you to the daily chart again, so the daily chart is showing to us that we have a 3, 4, 5 completed. So this most probably is an ABC, and so that means that it could be a corrective wave. So if I take you to the weekly chart, see, weekly chart is showing us that most probably what we thought was a 3, 4, 5 was correct, but that as a whole can be a 3 up, very rightly. And if that is true, then this ABC down could either be the ABC of the entire 4th wave for this move, which probably would mean that more longs would come, or because, as you can see, symmetry is not correct and AO has not crossed the 0 line, then most probably this is the A wave down of the weekly chart, which might be followed by a B and a C, and who knows how long it's going to go. So let's not go that forward. So if we just restrict ourselves to the daily chart and this formation here, then we have possibly a nice setup one short available here. The only downside to that is that it is on the higher time frame in ABC. Now, why is that a downside? It is because the law of the ABCs is that when you put a fib expansion on it, look at that, I had not done this, and if you guys are doing, those of you who are doing it, you would have a smile on your face as well, is that A is equal to C. In most cases, the length of wave A down will be equal to when the length of the C down. In that case, it's going to hit fib expansion 100, which means if I bring the beautiful info line tool here, is that the pips that it moved between wave C, in this case, I think it's 398, is it? And the pips that it moved, or the range of it during A wave, would be exactly the same. That's what we mean when we say fib expansion 100. That means this move and this move are exactly the same. So that's the drawback, because once it happens, it actually indicates that ABC has ended. Now, if you were to ignore that and then you go to the 4-hour chart, you have a short setup. So what I'm doing is that, having all that information in the back, I'm actually going to put a pending order here and a stop loss above that box, and I will watch it. If it breaks and clears this level and comes to this level, I will take some profit and bring my stop loss to break even, and then I'll see whether it's going to turn around here or is it going to continue the move down. So that is my quick 10-second Elliott wave analysis on Euro USD.